Hi, and welcome to the Stockscores Market Minutes for July 13th, 2015. This week I want to talk about the anticipation versus the news. Markets tend to move in anticipation of fundamental events and react quickly to changes. What we're seeing right now is the market anticipating what will happen with Greece and whether they stay in the euro or not. Once the news is out, the change is priced in, and therefore the news really doesn't matter anymore. And I think that this is something that new investors often don't understand. The news only matters when you're anticipating the news, because that is the time when the news is being priced in, when it's being valued and the price of the stock or the market will move in anticipation of the news. Once the news is out, the information is there, and the market's pretty much digested what that information is worth. You see, the market looks forward and not backward. And as investors, we have to remember that what happened in the past doesn't really matter anymore. Traders need to focus on the anticipation, on the speculation of what will happen in the future. And once the results are out, forget about it and move on. All right, well, let's talk about the markets now. This is the chart of the S&P 500. Going back the last month on a 60-minute interval, I've drawn the red downward trend line as liberally as I could, just to show that the little bits of rally that we've had in the last few days hasn't broken that short-term downward trend line. Now keep in mind, this is very short-term. This is just a 1-month chart looking back 30 days. And therefore, we have a bearish picture here. Now, Friday we had a pretty big jump to the upside and plus 200-point gain for the Dow, but it hasn't broken through neither horizontal resistance or that downward trend line. So the market still isn't satisfied that the events in Greece are figured out yet. And of course we know that because we still don't have a resolution there. You just have to read the news to know that. On the S&P 500 chart, the longer term chart here, this is going back 3 months, we can see that that long-term upward trend line, which I have drawn in green, is still intact. And until that is broken, and it came very close this week, until that is broken, we shouldn't get too pessimistic. We're flirting with that upward trend line now. It may pause here for a few weeks. It could break that upward trend line. Many people think that the fall could bring a correction for the market. And that's what you want to watch for. Does that green upward trend line get broken? What's also important to note, and we've talked about this in recent weeks, is the red line that I've drawn across the tops is not rising as quickly as the upward trend line. That shows that buyer interest is waning, that the buyers are less enthusiastic. So we do have some signs that there is the potential for a correction in the next few months, let's say, but there isn't the sign that it is happening. That upward trend line is still intact, and therefore we must remain somewhat optimistic longer term. On the Russell 2000 index, which is the US small caps, we see some outperformance. They are doing better than the large caps, and so that tells me that at this point we're getting money rotating out of the large cap stocks and into the small cap stocks. And as long as that is underway, we should remain optimistic for the smaller cap stocks because they do look like they can outperform as long as the market isn't breaking its upward trend long term. Moving on to the TSX, you can see that it's performed, I would say, more miserably in the short term than the S&P 500. We are in a downward sloping channel in the short term. This again, a 1-month chart, 60-minute interval. And we remain locked in that downward sloping channel. That is a sign of pessimism. Longer term, this is the 3-month chart for the TSX 60. You can see I've drawn again as liberally as I could the green upward trend line, and we're just flirting with that line this week. The bottoms are still rising over time, and therefore we have some long-term optimism there, but we've been stuck in this sideways range for looks like about 7 or 8 months, and so that is why I have a neutral rating on this market long-term, but a bearish rating short-term. The weakness in oil prices in the last week, coupled with the longer-term weakness in things like gold and mining, really kind of took the TSX Venture market lower this week. It is now at its lows from December. It needs to hold those lows, really stuck in a sideways rectangular consolidation, probably a little bit oversold, probably due for a little bit of a bounce back, but I do think that this is a market that you want to avoid right now unless there is an individual stock that has some good potential. Here is the chart of the TLT, which is the 20-year Treasury bond fund, and it tried to show some strength this week. Early in the week it was up. That meant interest rates were down, but by the end of the week it was back to the lows, remaining in that flag pattern, that downward sloping channel that I've drawn with red and green there. And I think that interest rates are likely to continue to move higher. That means this moving lower, remember they're inverse. If this goes down, interest rates are going up. Here's a chart of the US dollar, flag pattern. You can see the strong upward trend that began last July, trending slightly down over the last 4 months, but that flag pattern could resolve with an upside breakout. So you want to watch, does this red upward trend line, which is held up this week, you can see there it didn't break through that, or do we go back down to the green line and remain in pullback phase? I think most likely we move lower here, but you can't excuse the fact that there's a lot of events going on in the next couple of weeks that could create a lot of turmoil in the international markets, which could make the US dollar break to the upside. And that's a real important chart to watch because it has such a huge effect on the price of oil and the price of other commodities. Here's the chart of gold. Remains a bearish chart. We've got bearish falling tops. That's the red line, moving down towards support at the green line, and it's getting pretty close to that support. So does it hold? Does it break lower? Or does it remain in a sideways pattern? That's what we want to watch for there. If it breaks down through that green line in the next couple of weeks, that would be a signal that the market for gold is moving lower and you want to be real defensive there. Here you can see the drop in oil prices this week. Pretty significant drop, now testing the lows of, it's hit it twice now in March and in January. And will it be a triple bottom, or are we going to retest and move to new lows? That's what we have to watch for, but I'm pretty bearish on oil right now given that chart. And notice here, fear has taken a rise in the last couple of weeks. This is in anticipation of something negative happening, perhaps with Greece leaving the euro. We've seen a real jump in volume on the VXX. You can see the volume in the last 2 weeks is much higher than normal, and we're moving higher. It's been a difficult market to trade so far because it doesn't really trend over a number of days. It has intraday trends, and so it'll go up one day, down the next, up one day, down the next. It's very choppy. That shows the uncertainty of the market, but certainly demonstrating that there is a pickup in fear as evidenced by that rise of volume and price action in the VIX. All right, so what are my ratings? US stocks, neutral long term, bearish short term. Same with Canadian. Gold, bearish on both time frames. Oil, I have gone from neutral to bearish short term, remaining bearish long term. The market is trying to figure out what will happen with Greece, and the anticipation of that is making it difficult to trade. The long-term outlook is still okay, but short-term weakness is pushing the market to the brink of a breakdown. We don't have a breakdown yet, but you want to be cautious. Gold and oil suffering. The strength of the US dollar is critical to those commodities as it is to all commodities. And I really recommend that right now, because of the choppy trading on light volume, you trade with caution. Well, that has been the Stockscores Market Minutes for July 13th, 2015. Have a great week in the market and trade well.